Good morning. Quick roundup. So, President Donald Trump fired Lisa Cook, the first African American Fed governor, citing alleged mortgage impropriety. I guess this time Trump did not tackle. The dollar weakened broadly after the news in early Asia. So the dollar actually strengthened a bit overnight and gave up pretty much all the gains after this news came out. The issue is very less about near-term rate policy, but more about Fed independence and institutional credibility. The yen strengthened in a flash from 147.87 to 147.06, and gold rallied a good 1% after this news. So after a very dovish speech from Powell at Jackson Hole, the question is what's next for the dollar and for dollar yields? So in 2019, facing Trump's sharp criticism, pretty not unlike what's happening now, the Fed executed a mid-cycle adjustment of almost 75 basis points. Powell showed good tactical skill. Cutting rates actually helped diffuse the political confrontation. The current situations feel similar. Better to cut modestly to take the edge off. So a September cut looks likely, very likely actually. But the path beyond that remains uncertain. So from a dollar perspective, this is a negative. So markets have already priced in too many cuts probably. But with the risk skewed, the balance for the dollar, I would think, remains on the upside. So what markets are now considering is the fact that Powell gave very little clarity on what follows after the September cut, leaving markets uncertain about the Fed's longer-term trajectory. Also considering that this was Powell's last speech at Jackson Hole, one would think it was a very opportune moment for strategic introspection and to outline the lessons learned. But the theme continued to be reliance on backward-looking data rather than forward-looking strategy guidance. So that, I guess, was a little disappointing. The dollar had recovered broadly before the Cook firing news. The dollar yields inched up a little bit even before the news, and actually inched up a little more after the news. In fact, the theme of yields hardening was seen across European markets too. The US equities fell quite sharply overnight. This was before the news, and most risk assets like cryptos fell quite sharply again, with Bitcoin nearly down 4%. So we have Japanese inflation and durable goods orders from the US today. Trump also signaled continued US backing for Ukraine security, while the progress hinges on future discussions. From France, Prime Minister Francois Bayrou has announced a high-stakes conference vote in the parliament, scheduled for September 8, to push through his very contentious fiscal plan. The proposed measures include sweeping austerity, 44 billion euros in spending cuts, pension and benefit freezers, public holiday removals, and a new wealth-based solidarity contribution. The bond market reacted quite sharply. France's the 10-year bond yield rose to 3.5% with a widening spread over German bonds, where that was quite natural. In fact, I believe the French yields now are quite close to the Italian or the Spanish bond yields. So how does this affect Macron? So Macron's party Renaissance no longer has a majority, forcing him to rely on fragile coalitions and compromises. PM Bayrou is a centrist ally of Macron. So if he loses the confidence vote, it would be read as Macron's own political defeat. Also remember, in the 2027 election, Macron is not eligible to contest rather. Some key headlines from India. India's crude oil imports dropped to nearly an 18-month low. The government cuts minimum export prices for a lot of products. India's household savings is expected to generate $9.5 trillion into financial assets in the next 10 years, according to Fitch. The government bond yields rose a little bit. In fact, they rose to a 5-month high, ahead of a fairly large supply expectation. Thank you, and that's all for today.